Morning, everybody. This is Rudy coming at you live from Palm Beach in Florida. You can still call me Mr. Roxy if you'd like. Of course, we had an excellent quarter. And just to see Credit Suisse downgrade Occidental the very same day of the third quarter conference call, that's not necessarily the reason for the small pullback on Occidental, or otherwise, if you'd like, the inability of Occidental to actually show us a little bit of love and increase in terms of stock price. But we'll get to that in a future video. What I wanted to do today is take a little bit of time just to dive maybe 1 inch or so deeper into the supply and demand curve for uranium. So specifically, what I want to do is take a look once again just at this little basket of uranium stocks that I have. And one of the reasons I'm doing this is not for you to necessarily say, hey, Mr. Roxy is buying these uranium stocks, let me buy them as well. No. What I need you to do as an energy investor is to say uranium, and specifically nuclear energy, and obviously uranium is the source for that nuclear energy, is in demand. How much is it in demand? And is this a part of my portfolio that I should actually dedicate, even if it's a small speculative percentage of your portfolio? How much of it should I dedicate to uranium, if at all, right? So maybe you don't want to go there, but let's take a sort of slightly deeper dive on this and just look at the investment thesis a little bit more critically and decide if it's worthwhile or not. This beautiful picture in the background is the Cigar Lake uranium mine that belongs to Cameco in Canada. So what I'm going to do is I'm going to go through my little basket of stocks. So remember before in other videos, if you've watched them, and if you haven't yet, it doesn't really matter because I'm going to cover them all very briefly here. I have a basket of 5 uranium stocks: Denison Mines, Cameco Corporation, Paladin Energy, GoviEx, and Energy Fuels. Energy Fuels is a US company. GoviEx is headquartered in Montreal in Canada. Paladin is an Australian company. Cameco is headquartered in Calgary in Alberta, but their mines are in Saskatchewan. And Denison is a Canadian miner as well. Some of these, like in my particular instance, I'm looking here at potential holdings either in Canada or in the United States. I can buy some of them on the New York Stock Exchange. Others I have to buy over the counter, OTC. If you look at the volume, in terms of the number of shares that are traded on a daily basis, daily average or whatever, you can see there's a lot of liquidity in these stocks. Millions of shares traded every day, with the exception of GoviEx, which is a really small company. In fact, it's the one of the smallest market cap of all 5 that I'm going to share with you. So in that same order, Denison, Cameco, Paladin, GoviEx, and Energy Fuels. Let's take a look at some of the technicals now. For those of you who already know me, you will probably know, or otherwise you might have realized by now, I'm a fundamentalist. I'm not a technical guy. But that doesn't mean I shouldn't look at these. So in case you're not familiar with it, some of the technical indicators that people look at on a regular basis are the 20-day raw stochastic. And what that means is traditionally readings over 80 are considered in the overbought range. So when you look at the stochastic score for these 5 stocks, respectively, they are 86, 91, 69, 84, and 97. So you have this potential sort of, maybe from a stochastic score point of view, there seems to be perhaps one buy and the rest of them are completely overbought. I cannot, in good faith and good judgment, base a buying decision on a stochastic score, even though I kind of look at these things anyway, just because they are interesting. Also interesting is weighted alpha from a technical point of view. Weighted alpha, in case you don't know, measures the performance of the security over a certain period, which is usually a year, with more importance given to recent activity. A positive weighted alpha shows that the security produced a greater return than the benchmark. Plus 272, 173, 246, 151, 329, right? So you can kind of see from a weighted alpha point of view, if technicals is your thing, you can kind of start looking at these and start making a judgment call for sure. If you're looking specifically at the stochastic score, you might not want to touch any of these because they are mostly over 80. The only buy from a stochastic point of view, as I said, is the middle one, which is Paladin. How about performance? So over the past 5 days, this is not current. I did not do this yesterday. Today is Saturday. It's actually Saturday morning. So this is not from Friday. This is actually from Thursday evening, I think. Over the past 5 days, Denison up 9%, Cameco 6%, Paladin 3%, GoviEx 10%, and Energy Fuels 20%. How about over a 3-month period, a little bit longer term, 75%, 56%, 82%, 122%, 85%. So you can see at a glance, so even 6 months, 63, 46, 101, 58, etc. You can see at a glance that these stocks have been performing well. So even though it's a relatively small basket in terms of, let's say, percentage or dollars, from an investment point of view for me in my portfolio, the performance has been so significant that on days when energy actually pulled back, for example, the other large basket that I have is financials. So on days when those actually pulled back significantly, these uranium stocks have actually sort of right-sized my portfolio. So even on bad days, I've had good days because of uranium. Of course, it's also fair to express that the other way around, because there have been other days when the market has actually been good and I have not had good days. And sometimes that's also due to uranium, because sometimes being volatile as it is, these stocks pull back, 10, 15% in one day. But overall, it's been on the up. From a size point of view, these companies are sort of mostly smaller, and some of them, with the exception being Cameco, at around 10 billion, has a decent market capitalization. In case you don't know, market cap or market valuation means the number of outstanding shares multiplied by the current share price. So the key statistics here, the market cap for Denison, about 1.4 billion in market cap. Cameco, as I said, is an outlier, almost 10 billion. Paladin, 1.2 billion. GoviEx is not applicable on this particular chart from bar charts, but that's because GoviEx's market cap is only about $470 million or so. So it's really too small to kind of log. And Energy Fuels, 1.2 billion. The last or latest earnings dates, everybody's now reported. We're still waiting for Paladin, which is going to report towards the end of November. Everybody else has already reported the quarters in the books. And as a general rule, it's okay. Some of these reports, so like Cameco, for instance, missed on earnings and revenue. It doesn't really matter, because if you look at it from a futures point of view, it's really, really good. Now, why is that, Mr. Roxy? Because uranium does not trade on an open market like other commodities, like oil and gas, for example. Buyers and sellers of uranium negotiate contracts privately. Prices are published by independent market consultants. So what you have here is a situation which is almost like a private placement from a publicly traded stock point of view, where two parties may agree, like let's say, for instance, I have a chunk of Occidental Petroleum shares that I want to sell, and I happen to have a buyer who's prepared to pick up my, million shares of Occidental Petroleum. I can do a private placement. Of course, these things have to be announced if you're an institutional investor, or for a variety of other reasons, but you can do a private placement. Now, using that as an example, most of the uranium trades are sort of like private placements where the buyers and the sellers negotiate contracts privately. So a country, for example, that operates a number of nuclear reactors, so let's say, for instance, Japan, might have delegates who are negotiating directly with Kazatomprom or with Cameco, and these contracts are not only negotiated between the two parties, but they're also long-term contracts. So they'll say, over the next 20 years, we will pay you. If you look at the spot price now, sort of between $40 and $50 a pound for uranium, they will say, we'll buy uranium from you for the next 20 years at $75, for example. Or otherwise, if the supplier is sitting on a lot of inventory, they might say, we'll give you today's spot price, say $50 for the next 20 years. So it's not like a typical open market trade between buyers and sellers. Now, here's an interesting thing, because really what I want to focus on here is not so much the technicals and not even the fundamentals of the individual companies. I actually just want to look at the market in general. This is the uranium chart. And these pretty colors over here are the producers. And you can see at a glance the largest producers, this sort of whatever color that is. I'd have to ask my wife what color that is because she has fancy names for colors that I don't understand. But this area here is Kazakhstan, and Kazatomprom is the largest supplier and manufacturer, producer from a uranium point of view globally. Second largest is Cameco, which is Canadian, and then of course there are a number of other Canadian producers as well. And then Australia produces quite a lot of uranium as well. But you can see there are a number of countries that supply uranium. The largest three, for sure, number one, Kazakhstan, and then number two is Canada, and then the rest. Australia is quite a big supplier as well. What's most striking is this black line. That's the actual requirement or demand. And the pretty picture of little mountain graphs that you can see in the background are the different suppliers. So you can see at a glance that since the period sort of in the middle of this graph here, in the 80s, when there was, for a period of time, more supply than what there was requirements or demand, it has changed significantly during that time. So this is a 40-year period. So these cycles happen perhaps once in a lifetime or so, and that's one of the reasons why I want to share this with you. But let's take a look at this. And the information I'm sharing here with you is information from Cameco in Canada. Years of persistently low prices, right? That's never a good thing. Imagine if WTI or Brent was trading at $15 or $20 a barrel, or $12 a barrel, as Kathy Woods would say, for the next 40 years. Would you want to be invested in energy? Probably not. The fundamentals being amplified by several unplanned supply disruptions. So whatever is wrong today was made worse by the fact that there was a COVID pandemic, the purchase of physical uranium by investors, which is a good thing, the risk of global supply chain interruptions, which potentially is a good thing too. So positives and negatives, but the fundamentals as they exist today are being amplified by several unplanned supply disruptions. Some of them are good, some of them are less good. Uranium is a highly trade-dependent commodity. About 80% of primary production is in the hand of state-owned enterprises. Now, we know this already because, as I've already shared with you, Kazatomprom is the largest producer, and the largest owner of Kazatomprom is the Kazakhstan government. As a result, government-driven trade policies can be particularly disruptive for the uranium market. So think of that just for a minute, because when you have a focus on clean energy or green energy, most people say, well, you got to run away from fossil fuels. Well, to be honest, uranium is also a fossil fuel. However, it is the cleanest, safest, and most efficient green energy source known to man today. But governments don't necessarily think rationally, and very frequently they are just driven by opinion polls. So when people say uranium is scary because nuclear energy is scary and we're all going to die, it might be interesting to note that during the Fukushima disaster, which many people, or caused many people to be especially fearful of uranium and nuclear energy, the causes of death were absolutely not as it relates to radiation, nuclear, or uranium per se. Unfortunately and regrettably, many people lost their lives, and some of them lost their lives as a direct result of the tsunami, which is death by tsunami, and many people died during that period shortly thereafter of a variety of different conditions, circumstances, or whatever related to the tsunami rather than to the failure of the nuclear reactors in Fukushima. If you look at the facts related to that, you'll actually see that I think there was one person who actually lost his life as a result of contamination by radiation. I think there was one. There might have been zero. So I'd have to double check myself on that one because I'm not absolutely sure. But government policy, right? So now there's a big drive for, and we saw it recently when all the wealthy people flew into Glasgow in their private jets and their yachts and things like that to discuss how the ordinary people like us should stop eating meat and cut back our energy consumption in order to save the planet. And then they all left after a couple of days of a huge party and flew back to their respective domiciles in their private jets and private yachts and things like that. And the party for them just continues as before. So much ado about nothing. However, currently in this environment that we're in, the risk to uranium supply is greater by far than the risk to demand. The world needs electricity. Talking about demand, countries looking to install baseload power, while others are looking for a reliable replacement to fossil fuel sources. And finally, there is a new demand for things like electrification of transportation. Of course, electric vehicles are in the news a lot these days, despite the fact that it requires and actually uses a relatively small amount of energy for charging the electric vehicle, but massive amounts of fossil fuels in order to manufacture the electric vehicle. So please make as many electric vehicles as you possibly can, because I am an energy investor. This is a demand graph that shows you growth in electricity generation over the next 20, 30 years or so. And I think anybody can see where it's going. But the world also needs clean air electricity. Increased electricity demand is occurring at the same time. Companies around the world and governments are committed to net zero carbon targets. From a policy point of view, that nuclear will be needed in the toolbox to sustain and achieve electrification and decarbonization goals. The prospects for nuclear as a result continue to grow, and on the supply side, right at the bottom here, production through 2025 declined significantly relative to the previous report from 2019. The demand gap filled. The demand gap left by forced and premature nuclear reactor shutdowns was filled in 2018. There are currently 442 reactors operating globally and 51 reactors under construction. That is, as of today. There are many, many more planned. Just the other day, in fact, this past week, China said they will plan an additional 35 nuclear reactors over the next 20 to 30 years. These investments are massive because, in addition to the fact that it's a 20 to 30 year plan, it also carries with it a cost at today's prices of approximately $60 billion US. Currently under construction, you can see most of it is in China, Asia, and then the European Union, the greenest of green, has realized that they now, because of their renewables policies, have started burning coal again. They may as well go back to nuclear. And the European Union is now certainly one of the leaders again in the top three. I expect India might overtake the European Union shortly in terms of nuclear reactors under construction, but we'll have to see how that goes. Putting it all together, utility customers do not need to come to the market right before they need to load uranium into their reactors. To operate a reactor that could run for more than 60 years, natural uranium and the downstream services need to be purchased years in advance. It goes back to the earlier comment I made about long-term contracts. As the spot market continues to thin, the pounds available will not be adequate to supply the growing backlog of long-term demand. Ultimately, we expect the market uncertainty to give way to increasing concerns about the security of future supply. A return to long-term contracting, which reflects the economics of bringing on new supply, is beginning to emerge. So guys, that's kind of a short summary of the supply and demand situation that we are in right now. The picture in the background is Kazatomprom in Kazakhstan. And I'm sorry, this particular picture is the Olympic Dam uranium mine in Australia. I even captioned it for myself because I knew I was going to forget, but anyway, that's what you're looking at. So despite my errors, please subscribe if you're interested in my content. And remember to comment, because I look forward to your comments as we close off the discussion. In fact, most of the time, your comments and your input are more valuable than my actual content shared during the video. So let's think about this a little bit, sort of tell me where you're at. If you're not in uranium, that's fine. If you are in uranium, maybe share what it is that piques your interest and that caused you to say, I want to park some of my cash awaiting investment in this particular equity. Let us know. And if there's a reason for you perhaps to say, I'm not too sure, or where this is going or whatever, share that as well. Let's get some conversation going and see if we can help educate one another. I said during this video, this is a once in a lifetime opportunity. I'm not here to encourage you to invest in any particular commodity, let alone a particular equity. I just want to have a discussion and make sure that we all are educated and have the ability to do our own due diligence, make informed decisions, and at the end of the day, generate some good generational wealth. So on that note, this is Mr. Oxy. Yeah, you can still call me Mr. Oxy. About to sign off. I just want to let you know that as follow-ups to this, I will be making a more detailed video discussing Occidental's third quarter results and share some opinions as to why the stock hasn't moved. That'll come up next. And then I also will follow up with a video on energy transfer, which right now, from a traditional fossil fuel energy point of view, looks to be one of my strongest buys in terms of not only my current position, but also potentially where I might consider parking additional cash awaiting investment. So on those threesome of notes, this is Mr. Oxy signing off, saying enjoy your Saturday. Bye-bye.